Hi everyone, welcome back to the US individual taxation class. In this class, we are starting a new topic called sources of all income. This is part 1. In the part 1, we'll be covering the total income, or you can say gross income. So let's dive into to understand more about gross income and what all come in gross income.
The third topic, which is sources of all income. So when you think about sources of all income, what all generally come is being covered over here. The total income or gross income should be included but not limited to alimony received. So before, if the person have received the divorce decree before December 2018, then the person who is receiving the alimony will be considering the alimony received as income, and the person who is paying the alimony would consider that alimony expenditure, right? If the divorce decree is after December 2018, then it is neither considered as the income of the receiver nor considered as the expenditure for the person who is paying. So that is as per TCJA Act 2017, which came under the Trump administration, because he has like 4 divorced. So he was he was feeling it's difficult all the time. I'm paying so much alimony, and then like tax people come and ask for all these alimony. What are you paying and how much you're paying, and they are asking for some adjustments. Some of the alimonies were allowed, some of the not. He said, just break it, chuck it off. So in the TCJ Act, he removed like alimonies to be considered in the income or expenditure, right? How good is practical person. Second is annuity. If you are receiving any annuity, that will be considered as your income. If you are receiving any dividend, whether in stock or in cash or in property, that will be added into your income. Salary, wages, or worker compensation, that is added into your income. Then you have any employee benefit programs, that is also added into income. If you have any foreign earned income, it is also to be added. Interest income, or then employer paid for adoption expenses. So in US, you will see like employer also pay certain amount as a gift for the adoption time, right? In some of the companies, in a range of $2,000 to $20,000. It depends on company to company. So that is considered as a like part of your taxable income. So here, what we are discussing about total income, it's coming as a part of your taxable income, right? Then your capital gains or gain on sale of residence, capital gains, your rental income, your unemployment benefits, which you receive from the state government, municipality, or maybe federal government, right? So for any reason, if you are unemployed, then you'll get unemployment compensation. So that is being considered as a taxable income in the hand of recipient. Next is social security or railroad retirement, like pension schemes, right? If you are receiving a pension, in US it is called social security. It's similar to pension. So whatever the social security you're receiving after the retirement, that is your taxable income. Any prize or award you have received, that is also being taxable income. Any recovery from insurance claim you have got, that is also being considered as income. Any group term life insurance paid by the employer for the employee, that is also being considered as your income. Any scholarship you have received, or the income from pass-through entity. What are the pass-through entity? Partnership and S corporation, right? What is pass-through entity? Do you remember? We have discussed this concept. Any idea what is pass-through entity? Yeah, Rajat, Garima, Mayank, Shubham, Vivek. Do you have any idea what is pass-through entity? And what is the meaning of pass-through entity? Why we say partnership and S corporation are pass-through entities?
They're like something we can Um, like the LLC, we can form them in the future, like something like that you said about the S corporation.
No, Shivam.
Sir, just like sorry, but I've just googled it and got to know that it's something like sole property, not that we are giving in the own income, not in the name of business income.
Say that again.
Sir, like not in the name of our own income and giving the income on the business, and like giving in the name of our income, not in the name of business income.
Not really. Yeah, Mr. Rajat.
The something like S corporation. Achha, yes,
That I already mentioned. But why we call S corporation and partnership is a pass-through entity? Because Vivek, Garima.
सर बिकॉज इसमें जो लाइक जो उनका टैक्स चार्ज किया जाता है उनकी इनकम पे दैट इज चार्ज फ्रॉम द ऑनर्स पर्सनल इनकम लाइक एट द पर्टिकुलर इंडिविजुअल रेट.
Yeah, partially right. Yeah, Vikas, Vivek.
Sir,
Is it because
you told yesterday, but I forgot. Sir, I didn't attend yesterday's class.
But it was like discussed in
it-
first class also.
sir, is it because the individual is treated separate from the business, and that taxable income is based on the individual income and not the business income?
No, Rajat. Yeah, Vikas sir, what's new excuse?
Sir,
Yeah.
I didn't attend yesterday's class. Or
But this was discussed in very first class as well.
sir, very first class की revision चल रही है sir अभी.
So if you see in the very first class also, I think we touch base this concept, the pass-through entity, when we are discussing certain definitions.
सर मुझे याद नहीं आ रहा हमने फर्स्ट क्लास में किया था ये पास थ्रू.
Yes.
किया था सर.
Yes, yes.
कैसे
We have discussed about like partnership and S corporation. When I was giving like overview of it. So no worries, I'll quickly repeat because this is an important concept. And this is different than like how we do the treatment of taxes for companies and partnership in India. So in India, like partnership or the companies are being taxable as the separate legal entity, right? Whereas in US, like partnership or S corporation can be considered as a pass-through entity where all the income, net income of the partnership or S corporation can be transferred to the individuals, to the partners and the shareholder in the respective profit sharing ratio. And it will be get taxed in the end as a business income of the partner or the shareholder. It will not get taxed at the partnership level or S corporation level. So this will save double taxation on the same income. If you see in India, the income is being taxed at the partnership level and then net profit is being transferred to the partner, and then it will get again taxed in the hand of the partner. Right? To avoid that double taxation on the same income, so they have like called it pass-through entity as a partnership or S corporation. So partners have option to consider this partnership firm or the S corporation. The shareholder has option to consider S corporation as a pass-through entity where their profit without tax, like this, profit before tax will be transferred to the income of the partners or shareholder as the case may be, and it will be taxed in their respective hand as their business income. That is called pass-through entity. Make sense?
Sir, like I didn't get that, sir. Please.
Maybe how do I say?
But in India also, net profit which is taxable in the hand of partnership firm is also exempt in the hands of partners. So double taxation India में भी नहीं हो रहा है sir.
Okay, sorry. So, but here it will pass it to the partners, and it will be taxed in the hand of partner, not at the partnership firm level.
Yes, okay, sir.
So treatment is different.
Treatment is different.
Right.
Thank you.
For example, if you have, let's say, partnership firm called ABC partnership firm. They have, let's say, $150,000 profit before tax, right? And the ratio is, let's say, 50, 30, and 20. Partnership ratio is 50, 30, and 20. So this profit will be divided into 75,000, 45,000, and 30,000. Right? It will go to A, it will go to B, it will go to C. Right? And if, let's say, the A, B, and C, they have their other income of, let's say, $50,000 or $60,000 and $70,000. Let's say it's their income. So then this partnership profit of $75,000, $45,000, and $30,000 will be added into their respective income. How much is it? 125,000, right? 125,000. This is 100,000, right? So it is being taxable in the hand of partners, but this is not taxable to the partnership firm. For the firm, ABC has no tax, but rather than the profit before tax will be distributed among the partners in their profit sharing ratio, and it will be taxable in the hand of partner, in the hand of A, B, and C respectively. Make sense, man?
Yes, sir. Oh, they will be named into their own income, not in the name of business, right?
Yes, yes. So it's a profit from partnership that will come as a business income, but will be taxed in the hand of individuals, not at the firm's level.
Okay, okay.
So that is called pass-through entity, right? So everyone clear what is pass-through entity and why it is called pass-through entity, right?
The passing the tax benefit from the business to an individual.
Yes, that is allowed only in two cases. One is partnership and second is S corporation. For no other formation it is allowed, right?
Yes.
So for you to know like from where exactly as an enrolled agent, you will be testing the income. Whether the client is saying their salary income, let's say they are saying $10,000, whether it's actually $10,000 or it's $100,000. From where do you verify? Right? So these are certain forms you need to keep in mind. W2 form is for the salary, wages, and other compensation, right? I'll show you like how it looks like, and maybe like I'll send you the PDF also for the respective form. So this is form W2. So this all employee will get from their employer. And all employer has to mandatory give this form W2 to the employees. This is like how in India we get form 16. You might have heard about it. Form 16, have you guys heard about it? Do you know what is form 16?
Yes, sir. Yes, sir.
Yeah. Declaration of income.
No.
And then how much TDS is deducted and what is all.
Yeah, your salary income and the TDS deducted on those salary income has been shown in the form 16. Same way in US it is called W2 form. So in this W2 form, you will see the employee social security number. That is a common number for everything in United States of America, right? And then employer identification number. How in India we have TIN number. Do you know what is TIN number? Tax identification number.
Yes, sir.
Right? And then employer details. Then if you see here, they need to mention how much is the wages they have paid, how much is the wages for social security, for which social security has been deducted, how much wages and tips has been considered for calculation of Medicare, and then how much federal income tax they have withhold, how much social security tax they have withhold, how much Medicare tax they have withhold, right? All those things they need to mention over here and need to submit. So this is like similar to form 16 that every employer need to give to their employee, in which they'll be giving the details about their salary and wages income, including the tips and other compensation, and how much withholding tax they have deducted for the federal government, for the social security purpose, for the Medicare purpose, right? And then for the state purpose as well, state and municipal corporation purpose. If you see here in point number 16, state wages and tips, state income tax which you have deducted, local wages and tips, and local tax deducted, and then locality name. So you'll be saying like how much income you have considered for the calculation of state tax, and how much state tax you have deducted, how much income you have considered for the local taxes or municipal taxes, and how much local or municipal taxes you have deducted. That you need to mention here, right? So this will be the form when you are filing the income tax return of the individual of the United States of America. You will be asking, give me your W2 form, right? So that is the first question for any client which comes to you for filing of their income tax return, which is based on wages, salary, compensation, and tips, right? So this is the single document. You will get all the detail upfront really quick, and it will make your life very easy for filing of their income tax returns, right? So far, so good.
Yes, sir.
Yes.
Any doubt on W2?
No, sir.
Next is 1099C, that is cancellation of debt. So for example, if you have taken any loan from the bank, right, and then your client has got insolvent. So then what bank will be doing? They might be cancelling the debt, or they might be reducing the debt, right? For all the amount they reduce or cancel the debt, they issue form 1099C for that, right? And that would be considered as the income of the insolvent person. Next is unemployment income, which you receive from the state government or local government, right? So that for that they will issue 1099G form. So if you are unemployed for part of the year and you have received unemployment compensation from the state government and the local government, then the state government and local government will be giving you, the bank will be giving you form 1099G for the unemployment compensation which you have received from the government. Next is 1099 NEC. So income from independent contract work. So if you are doing like some contractual work, right? So the person who has given you the contract, they might be withholding some tax, right? Do you know, like in India, if you give some work to the contractor, you'll also deduct 2% TDS under 194C, right? Do you have idea? Do you have any idea about like TDS provisions in India?
Yes, sir. Yes, sir.
Yes, so sir. You deduct like TDS for any payment you made to the contractor.
Yes.
Right? Same way in US, the person who has given you the contract, they might be withholding certain amount of tax from the payment they are making to you. And for that, they will be issuing you 1099 NEC form. Right? How in India, you might have heard about Form 16A.
Yes.
Form 16 is for salary and 16A is for the non-salary. Right? Have you heard about it? Form 16A?
Yes.
Next is 1099R, that is payment or distribution from IRA or retirement plan. So if you are receiving any payment from the retirement plan, individual retirement account or any retirement plan, then that retirement plan company will be issuing 1099R to you, right? Next is income from sale of property. If you are selling any property, then to whom you are selling the property, they will be issuing 1099S to you. Next is investment or interest income. If you are earning any interest on the deposits, or if you are gaining any profit on the investment you have made, let's say unit link plan or mutual fund plan, right? So the company who are giving you interest or income from those investments, they will be issuing you 1099 INT, right? And if you are receiving the social security benefits after the retirement, then the government body will be issuing you SSA 1099. And the last one is health insurance marketplace statement. If you are receiving any money from the health insurance company, then they will be issuing you 1095E. So if your client says, I have this income, but from where do you verify? You'll be verifying the income from these forms.
Sir, ACA covers under the 1095A, yeah? Affordable Care Act. It is under the 1095A.
Affordable Care Act. Yes, you can say so. Yeah.
Like the Obamacare or the healthcare.
Yeah, no, CARES Act, I got it, but I still need to cross check. Is it part of 1099 or 1095? So maybe I'll get back to you. It's Affordable Care Act. So if you are receiving any funds under the CARES Act, then which form it should be coming? That's what your question is, right, Shubham? I'll get back to you on that. Right? So far, so good. As a EA, as an enroll agent, we should know like which form we need to verify for which category of income. Right? Any doubt here? So far, so good. Yeah. Rajat, Garima, Divya.
सर एक बार हेल्थ लास्ट पॉइंट एक बार और बता दीजिए हेल्थ इंश्योरेंस.
So if you are receiving any money from the health insurance, right? So then that health insurance company will be issuing you 1095A form.
This is also part of income, our client.
Yes. So there will be certain deductions we'll be discussing, but the amount you're receiving first come to your income, then you will be deducting certain percentage out of it.
एक सर ये कैंसिलेशन ऑफ डेब्ट है, ये भी मतलब अजीब है। मतलब इंडिया में तो ऐसा नहीं है, यहाँ पे यूएस में मतलब इसको इनकम में ऐड करते हैं।
Yes, for example, if you have taken any loan from the bank, and fortunately or unfortunately you got bankrupt or insolvent, and then now bank is waiving off certain debt, so wouldn't be part of your income?
But sir, my client position is वो जो प्रिंसिपल ही नहीं पे कर पा रहा है तो उसके ऊपर टैक्स पे करो, गवर्नमेंट ले रही है उससे।
Yes.
Very laughing position.
Yeah. Yeah, that's very true. But maybe like in India, you'll see like the people are, if they are into the downfall, they go poorer and poorer. But in US, if you see like Elon Musk have been 2 times bankrupt.
Okay.
Right. So, like scenario or dynamics are different, and the market and economic environment are different in 2 countries. So people go bankrupt, it's very much routine over there.
Okay, true, sir.
So they get recover as well. So many of the startups in US, they go bankrupt, but like just one brilliant idea, they can shoot up like anything another day.
Okay.
So scenario is different.
Right. Thank you.
सर लाइक इसमें कैंसिलेशन ऑफ डेट है तो हमारा हमारे इसका प्रोसीजर क्या होता है? हमारे पास जो होती है लाइक हमारा जो फॉर्म होगा हम उसके अंदर मेंशन करते हैं तो हमें पैसे
No, like you need to file this 1040. That is your income tax return for the individual, this form.
Yes, in this.
Right, in this form you need to mention wages and salary, how much they have received. You need to verify from W2 form. So you need to verify the salary from W2 form, right? If they have received any amount under the qualified dividend. So for the dividend, you will be verifying from which form? This 1099 INT.
Okay,
right? And if there is any pension and annuity, so from where you will be verifying that pension and annuity. So is it from Social Security, then 1099 SSA, right? And if it is from health insurance, then it is 1095A. So those things. So from where do you verify this information? Are these forms basically?
Okay, in this column we have to write about the form number, like.
No, in this column we need to write the amount which you have verified from these respective forms.
Okay, sir.
Right?
Yes.
Yeah, Rajat, Garima, Vikas.
Yes, sir.
Yes, sir. Clear, sir.
Clear?
Clear, sir.
Okay. So let's jump into the next topic, which is the most important topic for your exam purpose. What should be excluded to reach to the gross income? And then after, what should be considered as a deduction from the gross income to arrive at AGI? So if you remember in class 1, in this notes, I think we have discussed calculation of the income tax. So first thing is gross income, right? So as of now, first point is gross income. If you see, we have seen above what all to be considered as a part of income. It may be your alimony, annuity, dividend, salary, wages, employee benefit, foreign earned income, interest, employer paid, adoption expense, gain, and all those things, right? So what we are doing right now, we are considering all category of incomes, right? But second important thing over here to know is whether those income are taxable income or not, right? For the tax purpose, you need to consider only the income which are taxable income, right? Second important thing is deduction from the gross income, right? What all deductions are being available to the from the gross income to arrive at adjusted gross income. So if you see here in form 1040, first thing is all category of income will sum up to the point number 9, that is called total income. Then after you will see adjustment to the income. So adjustment to the income, that means the amount you can reduce from the income to arrive at the adjusted gross income, which is 11 number. Right? So if you go back over here, so far we are first we are covering this gross income, and then second point will be covering deduction from the gross income. Right? So let's jump into the gross income. In the gross income, so far we have covered all the category of income. But now second important thing is what is excluded from the gross income. That means what is not taxable income, right? So you'll be considering only the taxable income for the tax purpose. First is if your client is receiving military combat pay. That means same way how in India, the people receive like income from army, air force. Those are exempt income. Those are non-taxable income, right? So you should not be considering that income as a taxable income at first stage itself. Make sense? Yes, no?
Yes, sir.
Are you guys with me?
Yes, sir.
Yes.
Right? Second is retirement plan benefit. That is Roth IRA. If you are receiving any amount from the retirement benefit plan, which is Roth IRA, we'll be discussing in detail in the chapter 2 what is Roth IRA. But high level, I'll tell you Roth IRA is called non-deductible. And that means when you have contributed certain amount to the retirement plan, at that point of time, it has got taxed in your hand. So later on, when you receive the Roth IRA amount plus interest, that will be considered as exempt income. So initially you have paid the tax, but later on when you are receiving the same money along with interest, that is tax-free income. Third is retirement plan, which are deductible. So we'll be discussing about both of them in detail, don't worry. Fourth is simple retirement plan for small businesses. So there are retirement plan for the salary class employee, which is 401k, right? But there are certain retirement plan for the small businesses also, right? So those are also non-deductible at the inception when you are making the contribution. Hence, when you are receiving back the money along with interest, those are tax-free income. Health insurance premium paid by the employer. So if your employer is paying health insurance premium for you or on behalf of you, then that income is also exempt income. It's not required to be considered into your taxable income. Six is qualified charitable distribution over the age of 70 and a half up to $100,000. That means if you are receiving back from the qualified charitable distribution which you have made earlier years after your age of 70 and a half, that means after the age of your client 70 and a half, if he or she is receiving back any money which he or she has paid in the earlier age, has been considered as an exempt income up to $100,000, right? Next is child support received from the employer. If your employer, let's say for example, if your company, if your employer provide, let's say, daycare service for the kids of their employee, right? In that case of scenario, the benefit which you are receiving from the employer as a daycare service, that means you go to the work and you put your babies in the daycare center of the company, and the company has a dedicated play area for the kids and dedicated nanny for the kids to take care and the food for the kids. So all the benefit which you are receiving for your kids are also not considered as your taxable income, right? Next is childcare facility received from employer up to $2,500 if you are filing single. If you are filing jointly, then up to $5,000. The day child care facility received from employer means you are receiving the money from the employer to take care of your children's at your home when you are coming to the office. So up to 2,500 for the single when you are filing single is allowed or is exempt, and up to $5,000 if you are filing jointly return. That is being considered as a non-taxable income. For example, let's say Mayank is working with the company called 𝐂𝐡𝐚𝐩𝐿 in United States of America, right? And the 𝐂𝐡𝐚𝐻𝐿 is paying Mayank $500 every month for taking care of his child at home when he is working. And Mayank has hired a nanny and he is paying, let's say, $5 per hour to her for taking care of his child, right? So actually Mayank is incurring $1,000 and he is getting $500 reimbursement, right? And if you see in the 12 month, he has received $6,000, 500 multiplied by 12, $6,000 for taking care of his child when he is working, right? And he has incurred $12,000, right? And to those $6,000 which he has received from the employer, if he is married filing single, or if he is just a single parent, then up to 2,500 should not be considered into the taxable income. That means 6,000 minus 2,500, which is 3,500, would be considered only in the taxable income. If Mayank is married and they are filing jointly, then they can claim $5,000. That means total amount they have received is $6,000 minus $5,000, which is being allowed. Only $1,000 remaining is being taxable. Make sense?
Yes.
Yes, sir.
Shubham,
Yes, sir.
Divya.
Yeah.
Yes, sir.
So next one is compensatory and punitive damage. So do you know what is compensatory damage or punitive damages?
Sir, on the topic
Punitive
number.
means like if they did some tax fraud something.
Sir. On the topic number 8, you said that you will be paying $500 for the childcare, right? Yes. Okay.
Say it again, Mank. Sorry, I didn't understand your question.
So like you said that you'll be paying me $500 per month for the childcare support.
No,
And,
for example, Mayank is working in a US company called 𝐂𝐡𝐚𝐻𝐿, and 𝐂𝐡𝐚𝐻𝐿 is paying $500 a month for the child care to Mayank. So in a 12 month, you got 500 multiplied by 12, $6,000, right? If you are filing single, then up to 2,500 is non-taxable income. That means 6,000 minus 2,500. The taxable income is only 3,500.
And if I'm filing
right?
jointly,
If you are filing jointly, then 6,000 minus 5,000, only 1,000 will be taxable. Yeah, Vivek, you're saying something? Sachin?
Yes, sir. Yes, sir. Understand.
Got it? Okay, so what is compensatory damages? Any idea? Have you heard about this term before? Compensatory damages or punitive damages?
Yes, sir.
What is that?
If an employee in working condition is a very dangerous, then he receives a compensation from his employer. And punitive is, I don't understand, sir.
Compensation received from any pending litigation.
Yeah, good Google. Anyone else would like to attempt? Yeah, Mayank, Garima.
An employee expenses on behalf of employer, like entertainment of a customer, and like this type of expenditure on behalf of employer, then we can compensate by employer.
No, that's wrong. Compensatory damages are for any wrongful act of the employer that has got resulted into any financial damage to the employee, and the employer is making good to those financial damages are called compensatory damages. For example, let's say you are driving a car with your employer and your employer said drive it fast, and unfortunately you got overspeeding ticket of, let's say, $200, then who should be liable for this $200?
Employer, sir.
Employer, right? So because of employer mistake, there is some financial loss which you have incurred, right? And you have paid those $200 to the SOS, to the Secretary of State, right? Then you can claim that $200 from employer. That should not be considered as your taxable income, just because you are getting the money from employer, right? Punitive damage is more of interest and penalty on the same, right?
Sir, compensatory के कोई और example?
For example, let's say if you're working in a workshop, right? Let's say, let's assume you're working in a company like Hyundai, right? And unfortunately, you met with an accident while working. And let's say your client's hand goes injured and he cannot work for 3 months because of the severe injury. Then as an employer, they will be paying you the compensation, even though you are not working, because of the mistake happened in their premises, right? Because of the wrongful act has been happening in their premises. So for the 3 months compensation which you are receiving which like client is receiving when he or she is on bed, that is called compensatory damages received. And then any
sir, in simple, sir, someone is saying sir, in simple words, we can say the mistake of the employer is being like जो employer की mistake है, अगर वो employee देख रहा है and उसके premises के अंदर, तो like उसका जो जितना भी benefit हो, जितना भी उसका claim amount होगा, वो सब employer बाद में claim कर सकता है.
Yes.
Employer.
Yes, and that will be non-taxable income in the hand of employee.
Okay.
Right. It's not only about employer or employee. It can be with the supplier or customer also. Right.
So the spouse, like in the case of like the married, like
that's your personal matter. That has nothing to do with income and expenditure. Because like both of you are earning, you are already paying tax on it, right? So whatever like settlement you guys are making in between yourselves, that's completely your personal matter. It has nothing to do with taxes.
It can held in between the contractor or something.
What kind of contract you want to make?
Like sir, in the property contract, there is some mistake.
When property comes, it's a different matter. It's like a sale or purchase. Then it's a financial transaction. Then it's a financial transaction, whether it's like husband or wife brother or sister, brothers and brothers, sister and sister, father or any relative, then it's a transaction. And as it should be in an arm's length basis, the same way you should be treating it.
Okay.
Next is tax-free dividend. So like government bonds, municipality bond, their dividends are tax-free. So if the bonds are tax-free, bonds are giving tax-free dividend, then those income should not be considered as a taxable income, right? Next is gift. Any person who receive up to $50,000, $15,000, any person can receive up to $15,000 without considering that as a taxable amount. But to the US citizen spouse, you can give unlimited amount of gift, and that will not be taxable in the hand of other spouse. So you are free to give diamond or jewelry or any property as a gift to your spouse. So for that, no, it will not be taxable in the hand of other spouse, because the lawmaker feel like husband and wife are filing jointly and they are like soulmate. Next is if you have a foreign spouse, if you are a citizen of United States of America and you have a spouse outside the United States of America, then you can give her or him a gift of $157,000, right? And then in addition to that is one lifetime gift which you can give to any person without paying taxes, is around $11.58 million. And if you are filing jointly, both of you can gift up to $23.16 million. That is not taxable. Yeah.
An individual can pay in $11.58 million.
Yes. Yeah. So that is once in a lifetime. So generally, like in the will, people do this gifting, or maybe when states are transferred, then these kind of giftings will happen. That's like once in a lifetime opportunity.
Okay.
But you have to.
Sorry to interrupt, sir.
Go ahead.
In India, that it's said that on the first gift can be paid on a taxable basis, can be like of any amount. On if I've heard, sir. And then next, if you're giving a gift again to someone, you have to pay taxes. So it's not in US that first gift can be of any amount, we can say.
Yeah, no, gift to any person up to $15,000, and gift to spouse. If your spouse is United States citizen, then any amount you can give him or her gift. And if your spouse is foreign spouse, then up to $157,000. And there's one gift which is called lifetime gift. If you are individually giving it, then it is $11.58 million. And if you are filing jointly and both husband and wife wants to give any gift to any third party for the lifetime, that is $23.16 million.
Yes.
Right. Next is group life insurance up to coverage of $50,000 paid by employer. So here the catch is coverage of $50,000. So when you take insurance, right, you pay, let's say, 10,000 rupees for taking up the life insurance cover of, let's say, 10 lakh rupees, right? So here the catch is $50,000 coverage. So for example, the employer is paying, let's say, $1,000 per annum, which is giving you coverage of, let's say, $70,000. Then what amount will be taxable? Are you getting my point? If your employer is paying $1,000 as a group life insurance coverage for you to get a coverage of $70,000, then what amount will be taxable?
20.
Up to $50,000 coverage exempt, and only $20,000 coverage is taxable.
How do you calculate that? How do you calculate that? That's also very important. So the question is $1,000 premium for $70,000 coverage, right? Then for $1 coverage will be 1,000 divided by $70,000, right? And for $50,000 coverage will be how much? 1 divided by 70,000 multiplied by 50,000. How much is it? Sorry, 1,000. How much is it? Can someone do math for me? 50,000 divided by 70. Or shall I do math?
Sir, it's 714.285.
714, let's say.
Yes.
714, $714. So 714 is for $50,000. And how much they have paid total? 1,000. So for remaining 20,000 is how much?
Sir,
286. So this is taxable. And this is non-taxable. So this is non-taxable, this is taxable. Make sense?
Sir, like I didn't get that with the whole question. Sir.
So if you are paying $1,000
Yes, sir.
for 70,000 coverage,
Yes, sir.
then for $1 coverage, how much you are paying? $1,000 divided by 70,000,
1,000 divided by $70, that will be
right? Algebra. And then for $50,000 would be 1,000 divided by 70,000 multiplied by 50,000. That means for $50,000 coverage, you are paying $714,
okay.
right? So this up to $50,000 coverage, whatever the money you are paying is not taxable.
Yes.
But over and above, that is 1,000 minus 714, which is $286. This will be taxable.
Oh, okay, sir.
Yeah.
Yes.
Rajat, Garima, Divya,
Yes, sir.
Vikas, good.
So this 286 is per month.
Yes, sir.
No, I said like $1,000 premium they have paid for the year. So it depends on like the questions.
Okay.
Right. Right. So group life insurance coverage we covered. Then within limits, employer contribution to health saving account. So if employer is contributing to health saving account, so the amount which employer has paid for self coverage, $3,550 per annum is non-taxable. For the family coverage, sorry, this amount has changed now. This is, one second. One second. Yeah, 3,600 and 7,200. Sorry, this is 3,600 and this is 7,200. So this is updated. Within limits, employer contribution to health saving account up to 3,600 from the employer contribution for the self coverage is exempt, and for the family coverage up to 7,200 is non-taxable income. And then if your family member, if you or your family member is more than 55 age, then additional 1,000 per person is being also considered as a non-taxable income. if your employer is contributing in the employee health saving account, right? Employee health saving account is like a fund where employer and employee they both make contribution, but this contribution can be utilized only and only for the healthcare services of your and your family member, right? Not for any other purpose. You cannot utilize health health service account for any purpose other than healthcare of yourself and your family member. Here, you also do the contribution and employer also do the contribution. So the employer contribution, which he is making for your benefit, whether that amount should be taxable or not taxable. So up to $3,600, if he is contributing only for you, that is exempt. And if he is contributing for your family, then up to 7,200 is exempt. And if your family member is more than 55 years of age, then additional $1,000 is allowed. Make sense? Yes, no?
Yep.
Yes. So
Why we are going through these details? Two reasons to it. One is when you are preparing the income tax return for the individual. So at that point of time, you will be looking at these numbers, right? Second thing, there are many companies which may come to you for your advice. What is the salary structure we should keep that will minimize the tax liability in the hand of my employee, right? So these numbers or these details will be helpful for advising to your client and calculating their taxable income. Yes, Sachin, you're saying something?
मैं इसी के बारे में पूछ रहा था, ये +1000 है जो इसमें सेल्फ कवरेज में ये 4600 हो जाएगा, और फैमिली कवरेज में इफ हस्बैंड एंड वाइफ दोनों ही अबव 55 हैं तो ये 9200 हो जाएगा.
Yes.
ओके सर, ओके, थैंक यू.
Right. So next is employer contribution up to $2,750 in healthcare flexible spending account. So like employer can choose to participate in health saving account, or they can choose healthcare flexible spending account. So healthcare flexible spending account is like a current account in which employer deposits certain amount, or they give like OD limit to the employee that they can spend up to certain amounts from that account, right? Up to 2,750, which as an employee we are receiving, is considered as non-taxable income. Next is illness or injury benefit received. While you are working, at that point of time, if you got any injury or if you got ill, you got sick due to work, right? So any benefit you are receiving on account of that would be considered as non-taxable income or exempt income, right? Next is interest received on state and municipal obligation, that is bond, is excluded. Generally, state bonds or municipality bonds are being tax-free bonds, and the interest income or dividend income which you are generating on them are exempt income, whereas federal government bonds are generally taxable. So you need to keep in mind, state when you get like in your question, you may see the income received from the federal government bond, then that income is a taxable income. But when you see in the question, income received, interest received, or dividend received from the state government bonds or municipality bonds, then that will be considered as exempt income, right? Keep in mind, federal bonds are taxable, but state and municipality bonds are non-taxable. Next is lump sum payment received from life insurance upon the death of descendant to the family member. If you are a family member, if your client is a family member and anyone who has died in his or her family and he or she has received one-time lump sum payment from the life insurance of that individual, then that income is not taxable in the hand of receiver. For example, your client's father was having a life insurance of, let's say, $1 million, and unfortunately his father died, and after the death the son, your client, has received $1 million as a death coverage from the life insurance policy, then that $1 million will not be considered as taxable in the hand of recipient son. But in future, if he or she is generating any income from that money, then that income will be considered as a taxable income in the hand of that individual. Make sense?
Yes.
Vivek, Sachin,
Yes.
right? For example, there is Mr. X who is living in Texas and his father is Mr. Y, and unfortunately Mr. Y died, and he was having a life insurance policy for $1 million which Mr. X was nominee. And now, after the death of Mr. Y, Mr. X, which is your client, has received $1 million from the life insurance company. So this $1 million in the hand of Mr. X is not taxable. But from this $1 million, Mr. X purchased a home and he is generating a rental income from that home, then that rental income will be taxable in his hand. Make sense?
Yes, sir. Yes, sir.
So 18th point is meal and lodging in office and for work exclude from the employee income. So for any work purpose from the employer side, if you are traveling anywhere and you are receiving the reimbursement for travel expense, reimbursement for your food expense, lodging and boarding expense, then that income is not taxable in your hand, because it is just a reimbursement of the expenses which you have made for the work purpose, for the company work purpose, right? 19th point is pension payment up to the defined limit under the Railroad Retirement Act or sales security. So there are certain limits which is defined. We'll be discussing in detail as and when we reach to that section. But to that extent, if you are receiving any money as a pension from the Railroad Retirement Act or Sale of Security Act, then that income is being non-taxable. Prize or award only if certain conditions are met. So there are certain amount like $25, $50, up to certain amount. If you are receiving any prize or award from the employer, then those are being non-taxable. And if you are receiving like scholarship, fellowship for taxation, for any courses, for any fees, books, supplies, not for the boarding, room and boarding, those income are being considered as exempt income or non-taxable income. Next is if you are receiving educational assistance from the employer, right, or student loan repayment between March 27, 2020 to January 2021 under the CARES Act, up to $5,250, then that amount is being considered as non-taxable in your hand. It comes under the CARES Act. So, like in the CARES Act, the Trump administration have waived off the student loans. So up to $5,250, which you have received under the CARES Act for the waiver of the loans is being considered as non-taxable income in the hand of recipient. Next is foreign income if certain conditions are met. Foreign income are not taxable in the hand of non-resident alien, right? For the non-resident alien in United States of America, only the income earned from the United States resources are being taxable, right? Up to $11.58 million income in respect of descendant of state. So same applies to the gift and state. So in the gift tax, you have seen $11.58 million gift you can give as a one-time gift or a lifetime gift. Same is the value for the state transfer also. If you have received, for example, Mr. X father, Mr. Y, got died, and his state was of around, let's say, $13 million, which is being transferred to Mr. X. So up to $11.58 million is considered as non-taxable. Only the remaining balance you need to pay taxes under the estate tax. Right? 25th point, interest on education survey bond. That is called 𝐂𝐡𝐚𝐸 bond if used for the qualified higher education. So if you have received any interest income from the government bond on the education and you have received the interest income which you have utilized for the higher education, then that interest income is not taxable, right? 26th point, qualified adoption expense paid by the employer up to $14,300. So if you are adopting any child and your employer is paying you, let's say $20,000, right? Up to $14,300 will not be taxable. Only the remaining $6,700 would be taxable. Next is distribution from overall education saving account if used for qualified education. So any distribution you have received from EE series or qualified education bond and which you have utilized for the qualified education purpose, then that income will not be considered as a taxable income. Next is up to $270 per month for parking and transportation. Parking and transportation provided by the employer is also exempt. Section 1202 small business stock held for more than 5 years in certain conditions are met. And if you are getting any income from sale of those small business units, then that income is also considered as exempt income. Next is loss on sale of qualified small business stock under section 1244 up to $50,000 and for married filing jointly up to $100,000 deductible from the AGI as ordinary loss. Then two more points we are about to finish. Employee contribution to retirement plan. Sorry, typo error. Employee contribution to retirement plan of 401k, 403b, annuity and SAP up to 19,500 plus 6,500 if age is more than 50. That is also considered as exempt income, and simple plan up to 13,500 plus 3,500 if age is more than 50 is considered as exempt income. Last point is employer business expense reimbursed by employee business expenses reimbursed by the employer under an accountable plan for the business purpose only that is also considered as exempt income. That means any expenditure employee is making on behalf of employer, which is in future get reimbursed by the employer, those reimbursement would not be considered as a taxable income because he or she has already spent that money for the benefit of business, right? So these all incomes you should not be considering when you are calculating the gross income. Make sense? Too big to digest?
Yes, sir.
No worries. Like as and when we start doing some practical question, you'll get used to it. So as of now, it's just a laundry list, maybe like after the class, you can patiently take a look at the notes and go through this. And then as and when we start using it, so you'll get familiarized. And then once you start doing more practice of the multiple choice question, then you'll be more confident and comfortable about all this. So these are just 32 categories, not much to be very honest. So if you understood or you just mug up these 32 category, you will not forget what to be considered in income and what should not be considered in the income. Right? But any doubt or how things are going, like is it right pace or am I going fast, or do you need some more explanation for the respective points which we are discussing? What's your feedback?
So it's understandable, sir.
Understandable. Yeah, because Vivek.
Like a little more self-practice is considered.
Yeah, Garima, Rajat, Vivek.
Sir, it is good. The pace is fine, but I just still need to understand how do we connect it with the book we have?
Yeah, so today, by end of today, you are done with page number 1 to 47.